Hello Mavericks, it is Imri and today is another day for the Market Roundup. It is August 30th. Alright, let's get things started. So in today's Market Roundup, we'll be taking a look at basically what's been happening in the markets today. We're going to take a look at a couple of commodities. We're going to be looking at the broader equity markets, of course, and whatever meaningful news came out of the day. We're going to be conducting some technical analysis on the major indices. We're going to be looking at market internals as well as the sector heat map. And then finally, we're going to be taking a look at some setups and opportunities.
Disclaimer: this video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Alright, let's break down what happened today. Jumping off with what's been going on in the markets. So markets are up yet again. They enjoyed a really nice winning streak over the last few days. Yesterday was a big day up. Makes sense that today would be a little bit smaller. What's interesting here is that the AD line is looking a lot healthier from the last time that I did one of these roundups, which was 2 weeks ago. And we still don't have the majority of stocks above the 50-day moving average, but we're getting closer and the sector heat map is looking a lot better as well. On the commodity side of things, both oil and gold also up on the day. In terms of daily news, we had some disappointing payrolls data coupled with annual GDP revised lower. So why would the market go up on what seems like bad news for the economy? Well, it all has to do with how the market believes the Fed is going to react. It's a little perverse, but generally what the market's trading on right now is a hope that the Fed is going to pause the rate hike cycle. Of course, the market's not forward-thinking enough to realize that a pause in rate hikes means that there's something terribly wrong with the economy. Anyway, that's a conversation for another roundup sometime in the future. But for now, things are looking good. Taking a look at the S&P 500, trading above both moving averages, has put the market back on bullish footing. I believe the next upside target in sight for bulls is 4607. A couple of weeks ago, I was looking at a bear scenario, and it looked a few days ago when we had a large down day that bear scenario might come back into force, but popping above both moving averages has since negated that option. It would require another close below both moving averages in order for me to flip bearish once again. And it's a very similar story over in the Qs. Broken out of this nice downward trending channel, and we're looking good so far. Again, I'd say 388 and change is in focus as an upside target. Moving on now to the sector heat map, tech is definitely leading the way, but energy also doing very well. There are a couple of sectors that aren't as rosy, however. Regional banks are still struggling. Healthcare isn't the greatest, and utilities are a little bit iffy as well. But if you're sticking to tech, you can't really go wrong. Or energy's been a great trade as of late also. In terms of the market outlook, we're at a +2, but this is a very interesting juncture for the markets. So I'm hesitating to go full boat bullish, especially as we have the employment reports coming out Friday. Let's wait and see how Friday trades, and then we might be able to revise this weekly outlook. But as of right now, based on the price chart alone, we're above both moving averages, a couple more days of bullish price action, and we might just get a bullish moving average crossover. In terms of potential trades, there's quite a few bulls. I don't have a lot of neutrals on there, and bearish trades in this environment aren't really worth visiting, at least right now. In terms of the pick of the litter, I put Corporación America Airports on your radar 2 weeks ago and identified this triangle. We've since broken out of the triangle. We're stabilizing on the 20-period moving average. We're well above the 50. Things are looking good here. I like this stock. Moving on to number 2 is Caterpillar. All right, so broken out of this downward descending corrective price channel, we popped above the 20-period moving average. I like this as a momentum play as well. And then finally, we have my MI Homes. Also put this ticker on your radar a couple weeks ago. I think we've got a really nice bull pullback here. We found support right where we should on that 50-period moving average, and we've started to trade fairly strongly higher ever since. Okay, so in terms of tomorrow's outlook and outlook to close out the week, for now at least, risk on sentiment is back. The big thing on Friday, of course, are those payroll reports, and we've had unemployment claims recently, as well as job openings, of course. And then on the earnings front, we've got Broadcom, Salesforce, VMware, Lululemon, just to name a few, but those are all names that I'm keeping on my radar. They could definitely experience some volatility as a result of their earnings reports coming out. All right, traders, that's it from me. Thank you so much for watching. I will see you next time.